You're watching a recap from Investor XP, the show that covers investing for gamers. Check out the video description for details. It is Wednesday, May the 10th, and we've got a great show for you today. Stick with us live. Here's what we got coming up. We're talking about Disney stock being down. We're going to take a look at Baidu, which is the Google of China. We missed two huge stocks in EA and NVIDIA. NVIDIA is particularly embarrassing, so we're going to review those. Each of those topics is going to get a recap video if you're watching a recap video, so you can look for those other ones. They'll be posted on YouTube today. Disney stock is down about 3% for really not good reasons, and we'll dive into that. Their earnings call was yesterday. We own Disney, and we look at this as an opportunity to possibly buy into Disney as it's down. So let's review their conference call yesterday that they had. I'll pull up the articles. These articles are going to be in the description, so you can look at them in depth. We're just going to do a quick overview of what they had in their earnings call. Disney, right now, not quite down 3%. The S&P and Dow have been kind of bouncing around all day. But Disney is down 2.75%. Basically, the story is ESPN. Disney had very good earnings. We'll pull that up. You can always go to their investor relations website to get all the latest documentation. Again, that's going to be linked in the article. But Disney, here's their second quarter report. Increase in earnings per share, 15%. They had a really good quarter. Now, if you scroll through this, they particularly call out ESPN and some extra cost in ESPN and doing business there. Everyone is hanging on to this ESPN item from their call because their subscribers are lower. They believe that people who use the a la carte, the cord cutters, will eventually make up for their lost subscribers in ESPN, but it hasn't showed yet. So there's higher costs, and there's a couple of good articles on this. One of them over on Yahoo, we'll link to that. But it's 3% revenue increased for ESPN, but the profits decreased by 3%. My take on ESPN is that and they're talking about the extra cost in some of the sports that they cover and their coverage of that. But basically, my take is ESPN has gotten way too big and bloated from where it started out, and they're right-sizing it by laying off people. So we'll see ESPN bounce back, and you'll see the subscribers come back. I'm pretty confident as people go to these a la carte models because ESPN's offered on all of them. And to me, ESPN it isn't the big story with Disney. The big story is the franchises that they have. So whenever ESPN drags down the stock, and ESPN is such a household name with sports, if they right-size that division, it'll be printing money once again. So I'm not particularly worried about anything like that. To me, the Disney, we like Disney because of the franchises that they have, and their billion-dollar movie opportunities left and right that they have. So that's what we like about Disney. Now, one thing did come up as different TV shows were talking about the earnings from Disney. Once again, people are talking about Apple potentially buying Disney, and if Apple does that, I'll probably sell my Apple shares. They're just two different of companies. If Apple wants content, Netflix is probably the better play to go up because Disney is really about their movies, which is content, which would be great for Apple to have, but their theme parks is such a huge segment, and ESPN and all those different things. I like them both as separate companies. I don't like big mergers like that, so I'd stay away from Apple if they were to buy Disney, that's for sure. Let me know what you think about Disney's dip. Is it overblown? Is it a good time to buy? Let me know what your thoughts on that are. That's it for today's show. Thank you very much for watching. Subscribe if you haven't already, so that you get the latest investing news for gamers first. We are live Monday through Friday, 1:30 Eastern, 12:30 Central. Tweet us at InvestorXP or shoot us an email. It's mail@InvestorXP. But I strongly encourage you to join the discussions on the recap video or chat with us live during the show. We're really trying to build this channel up, so I appreciate all the subscriptions we've been getting lately as we start to build our channel. It's great to see. I want to get this community building. So thank you very much for watching, and we will see you tomorrow.